I think that's probably consistent with the market's recent behavior. I think that even a limited deal of do no more further damage and maybe agree on some small points would probably be a win at this point. I think structurally they're not going to get anywhere more than that. And I think that's what the market's expecting. That's why stocks have bled up. That's why interest rates have begun to creep up and the curve is positively sloped again. And you've seen a resurgence of growth-oriented stocks, materials, industrials, transports, financials, et cetera. So it all does make sense. And honestly, if that story doesn't happen, then you're going to see a sell-off. But I don't think Trump really said anything different today than he's already said before.
And Kirk, what do you think? I mean, some of the other pieces of the wall of worry in the past that had the market pretty volatile, Brexit, the Fed, some of the other, slowdown internationally, economically speaking. Now we're at all-time highs. What happened to all those worries?
Well, I think you have the probability of a very bifurcated outcome, and I think there will be some kind of deal. A lot of those worries are still there, but there's just so much riding on China right now and the trade negotiations. I think odds favor some kind of deal, and the market is certainly pricing that in. But if there's not a deal, to your other guest's point, the market could go down. But I remain optimistic. I think China is in a quasi-recession, and I think the U.S. administration wants a deal. So we will get something.
Michael, we spoke a little bit at the top of the show about the strength of tech and then talking about investing in tech if indeed we get some kind of a deal. Where are you when you're looking at that big sector? I mean, would you go a little slimmer? Would you look at something like semis, although they've had a pretty big run, too, up about 48% year to date here? How are you playing a name like tech?
Huge, Courtney. We're definitely involved in that space as well as some of the industry sectors I mentioned. And we look at different subsectors. And certainly with tech, you have some good valuations, some very overpriced valuations, some companies that are just so overpriced that they're going to take a period of time to grow into their valuations. And I think it's a company by company specific issue. We got into semis early in the year when there was a big sell-off. We've been happy with their trade. We're in Facebook as an example of a big cap name that's still incredibly profitable despite all the negative news around them all year. And then there's other areas. Autodesk is another software company that we own. So we're in the software space, we're in the semi space, and always looking for new opportunities.
Kirk, for you, I see that you like financials, among others. That's a bit of a contrary play right now.
Well, I think the yield curve is steep. And in terms of crowded trades, there's a lot of crowding in technology. Financials are at 12.5 PE versus 17, 18 for the broad market. So I think financials offer value. I also like dividend yield, both domestically and abroad, because I think that's a good way to hedge your bets, so to speak. And what's interesting here is you see a rotation higher. And yesterday you had things like REITs, utilities, and a great company. I'm not recommending it one way or the other, but something like Caterpillar. So you've seen these kind of defensive utility dividend yielding type stocks that are rotating higher.